In fact, the central banks, now my computer kind of exploded. So I came across this spreadsheet at the Bank for International Settlements. And what I noticed, and then it was subsequently verified, is how central banks were using derivatives before, during, and after the crisis. But already in 2000, they discussed that central banks' use of derivatives really kinds of masks what's happening in the countries, because it masks what is happening inside of the central bank balance sheet. In 2014, the CFTC looked at how the central banks use derivatives before, during, and after the crisis, which is what I saw in that spreadsheet. And what they determined was that, and I saw this, prior to the crisis, it was used a little bit for hedging purposes. So let's say that they took a position in a foreign currency and they thought that currency was in trouble. Okay, well maybe they would use a derivative to offset that volatility in that currency. Not sure why they really had to do it since they can make the money, but okay. That would make some level of sense. However, they saw an opportunity, and also they needed to take a lot of derivatives off the bank's balance sheet because they had no value. So during the crisis and then afterwards, they were using this to enhance returns. In other words, speculate. But they also noticed how synchronized the central bankers were. Interesting. So you can kind of think about it like the central bankers control the bar. So where they used to maybe have a little sip from the derivative glass every now and again to just kind of stay nice and mellow, when the crisis hit and subsequently thereafter, they're right in there with all of the other players. So they went from sipping to swigging. Why not? If you can synchronize and plan and should I use the term manipulate? Maybe not. But if you have the ability to influence the outcome, you might get a little full of yourself. So I think that nobody should drive drunk. And frankly, personally, I think that bankers or central bankers are drunk on their power. But the problem is that there is not enough money in the system, there's not enough wealth in the system to bail out this derivative monster that is at least, this is just what we know of, 1.7 quadrillion. 2,200 times the global gross domestic product. And in the top 9 banks, these are their assets, which are your deposits. These are their derivative bets. Can you see how these dwarf that? So how safe is it? Because this is only possible on a fiat money system, but we're also at the end of the road. Nothing goes up forever, and this kind of extreme behavior cannot last forever. I mean, it is really just that simple. This is why central bankers are accumulating gold. Now, I know a lot of people that say, well, but my money is in the bank and it's insured by the FDIC. Well, in the most current DIF report, which is the fund where they hold the money to pay out for bank failures, there was a teeny weeny bit more than 1 penny for every dollar that's insured. And we aren't even talking about the money that's in the banking system that is not insured. 1 penny. So a crisis similar to what we had in 2008, though this is going to be much larger, but they were out of money and ran deficits during that period of time. And they said if even one more small bank would have gone under at that point, it would have been quite clear to everyone that they didn't have any money to pay out. Good for them that they were able to start the QE and avoid that. This next time, this is too big to bail out. And that's why I believe you should be accumulating gold too. It's real money in the system. And silver as well. So let's recap where we are right now, because it should be clear from this that that retirement tsunami has already begun. And you have so many people counting on critically underfunded systems. And the new people coming into the system that need to support those of us that are retired or nearing retirement, there's just not enough of them to support us. But I definitely believe that this crisis, while we'll all be watching this, and maybe, God forbid, but the war against ISIS or North Korea or wherever that next thing is going to stem from. So I believe that all of this chaos is just going to be used to mask the real crisis, which is simple. The system no longer functions. We need a money standard shift. All these levels of leverage and debt must reset. And all of these things are built upon these levels of debt and leverage, but they are fully integrated throughout the global financial system, as are all these systemically important financial institutions. This is why central banks are buying gold. This is why you should too, because you need to hold your purchasing power and wealth intact to take advantage of the opportunities that are most likely to present during this next crisis. Now, usually when I talk about the strategy, and here at ITM we certainly do have a strategy, and it's based upon historic valuations and patterns, because even though we can't guarantee tomorrow, my feeling is that if the same thing has happened before and we're doing the same thing, our best shot is that we're going to get the same results. So usually I'll go different parts of the world to try and show this to you, but I decided to do it from an American experience. So going back to the start of this great central banker experiment, where in 1913 they were allowed to print $2.50 for every dollar's worth of gold they had, and so we had the stock market go to extreme highs on all that money printing, leverage, margin, debt, etc. And the same thing happened with real estate, new highs. The roaring 20s also happened in the bond market. But when Black Tuesday hit and these markets dumped off, well, guess what? They used that crisis to take the gold the only way that you could hold the money from its citizens, but they also, thanks to Treasury Secretary Wooden, created this collectible law that allowed them to keep it and maintain their purchasing power. They knew full well what they were doing. These stars, so this is the bottom and this is the bottom. So if you had a tool that would help you maintain that purchasing power, look at the opportunity that presented since then. All you had to do was recognize the pattern and hold your purchasing power intact. And I hope you can see that, because that's the foundation of our strategy. So then you have to ask yourself the question, where do you think a portion of your wealth should be? I know where I like mine. Because the reality is thanks to central bankers and banks manipulation, gold is on sale. Physical gold is on sale. And we know that when they do a reset, and clearly the system must reset, they will revalue the dollars, the euro, the yen, all that debt-based money against monetary gold. And then gold will rise to its true fundamental value. Right now, that's somewhere between 10 and 50,000. We don't know what the coverage is. We don't know how much more debt they're going to grow. But what we do know is that spot at the close today was at $12.75. It's a bargain. It's on sale. Real gold, not paper gold, not Wall Street gold, but real physical gold and real physical silver as well, is finite. Silver's not indestructible, but gold is indestructible. It's divisible. It's labor-based. It is a store of value. It is good money. And that's what we need going through this. Because if you're in the right place at the right time with the right money, not only do you have a much better shot of sustaining your current standard of living as we go through this reset, but also building a wealth base to generate income that you cannot outlive and perhaps, dare I say it, pass on to your heirs. Well, that's it for today. I hope that you found a lot of value in here. We are all here to be of service. And that's why we're doing all of the quarterly webinars, and twice a week we're doing the Flash in 5s. You can access the archives 24 hours a day. So subscribe to our YouTube channel. You'll get notified of all these live events. Like us on Facebook, follow us on Twitter, and share this information. And especially the ones that I do that are Flash in 5 minutes, maybe you can get somebody to sit down for 5 minutes. We just don't want you to get caught looking the wrong way. So we're only a phone call away. 888-696-4653. So thank you for coming today. I really hope that you enjoyed this and got a lot out of it. Bye-bye.